Welcome back to Conflict of Interest, and we're here with Daniel Liptak. Daniel, what did you think of the budget?
Well, it was a soft budget, a very soft budget. The interesting thing is that they are spending their way out of a recession. I don't think we've hit the worst of our recession. It will come.
Really?
Why do you say that, Dan? I mean,
because there are some in the camp who've said we're
bottomed
coming out of the trough now.
Yeah, so it's probably the same people who told us last year that we wouldn't ever have a deficit for 10 years.
It may be, but why do you say...
What are you basing that on?
Well, look, the rest of the world has slowed down incredibly, and we're still slowing down. We still haven't seen the effects of the small businesses and small micro businesses having cash flow issues, inability to raise money through the debt markets or borrowing money from their banks. They will be shut down. That'll have a secondary wave or a second wave of foreclosures on mortgages and houses. And that'll flow through. We haven't even hit that yet. So that's coming up later this year. We expect that second wave. And we're also seeing an exit of some of the other larger banks out of Australia.
Right.
Yeah.
So there's less money to go around for borrowing.
And are we being hit by the US, essentially what is a collapse in the US banking sector? Are we being hit by that?
Actually, it's not just the US, it's also the UK market as well.
Yeah.
The UK banking market has probably caused us more grief, of course, because of course there's RBS,
which owns a bank here, doesn't it?
Yeah, and HBOS and Barclays. All of those guys have had significant exposures in Australia as well as American banks. They're pulling in their horns, of course, and going back home, and this is going to create a big problem as far as getting money to small businesses.
And there's still a risk of China dipping into recession as well, is there not?
It's interesting. China's one of those interesting cases, a command economy that's able to turn a giant population around on a pin or on a dime, as they say. And yeah, look, it's interesting. They could dip into recession, but they are looking more and more like there'll be an 8.5% GDP growth this year, which is where they need to be to just
that's the minimum, isn't it, for China?
That's
8 to 8.5%.
Now, some say that's enough to sustain us, that we'll as long as China's okay, we're okay.
I think the problem here is, and people arguing that, are really going back and saying, look, we had a fantastic run with this mining boom, and this is the reason we've got ourselves in this mess, really, is because we were expecting this mining boom to continue, and the receipts from that mining boom to continue. We've now got ourselves we had a structural deficit for many years under the Howard government as a result of them spending for middle-class welfare. And we're now in a position where we're much worse off than we probably would have been had that spending not occurred.
Well, that's a lovely irony, isn't it? That Howard and Costello, and we were talking earlier about how the Liberal Party likes to see itself as a good economic managers. What you're saying is that this government was left with a tougher job because the Howard government refused. I mean, it really did refuse to undertake that sort of structural reform of the budget in the later years.
Which means they would point to what looked like a healthy surplus, but essentially it was hollowed out in a way.
Correct. Yeah. Well, I'll tell you one thing about Howard. Howard was notorious for wanting to, spend large chunks of the surplus every year. I mean, I'll tell you an anecdote about, in the first budget that the Howard government did, which was a very savage budget. A whole bunch of decisions had been taken. Howard turned up at the last meeting of the Expenditure Review Committee and he went through items and just undid the work. And you saw, hundreds of millions of dollars just go back into the budget because he wouldn't, because he thought they were politically sensitive. I mean, this bloke was, they did a good job in the sense that, they did turn the deficit around, but they got very, very lazy and they spent politically towards the end.
They did, and I think the Australian public weren't that fooled. At the end, they weren't being bought for the fifth term.
But are you suggesting, Dan, that the decisions that the Rudd government have made on this budget haven't been tough enough?
Actually, look, history would suggest that they've probably done the right thing by not being too tough. In the 1930s, the American government, after a massive stimulus through the FDR, went and started cutting back and raising taxes. And it was all too soon, and it created a double dip in the late 30s. This is probably an attempt to try to avoid a double dip or to get us out faster. And that's why the 4.5% growth in GDP is probably possible if they continue doing the spending. Now, getting back to the debt thing.
Yeah, let's talk about debt and the bond market, because you know a bit about the bond market.
Well, it's interesting. $300 billion is the Australian issuance by 2019. I think it's around about that.
Right, so we're going to have, just to explain that for our viewers, we're going to have what did you say? $30 billion. $300 billion out there in debt that people have bought. Yeah, on the international markets.
Or on the other side of that, the Australian government has borrowed and raised. Then they then owe that back to who is holding those bonds. But at that same time, it's estimate, we could estimate the superannuation schemes will have around about $2.5 to $3 trillion. So they could hold all of that and still only account for 10% of these superannuation holdings. Now, in a typical balance fund, a fixed income portfolio will be 30%. So fixed income would be government bonds as well. So it's not going to be impossible to
So you don't think it's going to be too big an ask?
No, not at all.
And who will buy the bonds, typically?
Superannuation funds.
Super funds.
And
so that's what you're saying. So the Australian super funds will actually soak up. Effectively will pay for Australian government debt.
Well, it won't be just Australian super funds; it'll be pension funds around the world. So they're out there screaming for good quality, long-dated government-backed paper. They haven't been able to get any, as you said.
That's right. There was none left.
There was none left. So, and also the other groups, insurance companies, life insurance companies will need to match off their future liabilities with assets going out to that type of term, and they need solid.
Dan, what is Australia's debt profile going forward? Is there any linkage between that and the currency, in terms of international perception then of Australia?
Yeah, look, people are talking in the fact that we are in a pretty good spot. Our debt issuance is not going to be that high. Our deficits won't be as high as the other GDP, so the OECD countries. As a result, it shouldn't be too negative on our currency. We're also going to have a massive selling, perhaps, of the US dollar continuing for some time, which will only boost Australia's currency. And another boost to us will be if China does kick on, and if we do get another wave of commodity boom happening.
Well, let's move away from the budget for a second, because I just want to talk to you about an article in yesterday's Melbourne Age by David Hurst, his Planet Wall Street article, in which he talked about gold. And I'll declare my interest here. I'm a non-exec director of two small gold companies. But he was essentially saying the US dollar's finished, that China is buying gold, huge amounts of gold, and that gold is going to continue to rise. And essentially saying you should have it in your portfolio. I mean, he wasn't saying that, but I mean, that was the essence of the argument. Australia sold most of its gold reserves in 1997. The Reserve Bank sold them. Should we have sold them, and should we be trying now to get back into the market, and should the Reserve Bank be buying gold?
Well, I note that I'm not a director or a non-executive director of any gold
company. So you've got a pure view on this. You've got a pure view on this.
Yeah.
I understand where he's coming from, but I actually disagree. I think that many institutional investors don't need to hold gold.
What do they hold? What do they hold?
Institutional investors.
Yeah. Bonds,
equities, infrastructure, assets, and direct property.
So you don't need to have gold in your portfolio?
Look, gold is a great asset if you believe in Armageddon.
Yeah. Well, there are a lot of people out there who do believe in Armageddon.
Yeah. But it's a great one if you need to fly. If you need to have it flight or flee from a country or from a disaster area. It's unlikely a superannuation fund and its members are all going to be able to pick up bars of gold and walk off to the next country. Yeah. It's just not going to happen. Yeah. And also, it has a bit of a problem for an institution that's sitting there for the good of future generations or for 30 years investment horizon, saying, well, we perhaps don't think we're going to be around that long.
So we'll hoard gold.
So I just don't see that being a...
Yeah, no, well, there are very strong views about gold held in the investment community, as I know, very strong views. But it's just interesting that Australia, which is one of the world's largest gold producers, did in fact sell nearly all of its gold. I mean, should the Reserve Bank, in your view, be I mean, just about every other central bank now is starting to buy back into the gold market.
Except the US.
Except the US,
We're going to flood the market.
Yeah.
And the IMF. So.
Yeah. But why is China buying it? Why is China buying gold?
China has said it would buy it if they want to sell all of it at once.
Yeah.
Basically, they know that if they were to do a major change like that, I think it was 2,000 odd tonnes.
Yeah.
they'd get a great price.
Yeah, this is a classic Chinese play.
And it's also up in the ante. They won't ever come to a point when they get to offer the entire amount at once. One
last question, Dan, before we go. Do you think that the idea of getting the budget back into surplus, by about 215, 216 is a realistic one?
The question really
Or does anyone really know the answer?
I don't think anyone knows the answer, but I think really, is it a moral decision that we're going to bring the worst affected by the recession, the poorest people in our community, along with us during this hard period, or should we just let them go just so that we can have a budget surplus?
Oh, I think
so the numbers look pretty.
So the numbers look good. We've been talking with our resident economic commentator, that's what I like to call you now, our resident economic commentator, Dan Liptak. When we come back, Sophie and I are going to wrap up debt, deficits, but not gold.